All right, everybody. Stocks by the numbers. Welcome back. Quick updates here for a couple of these brand name tech companies reporting earnings today after market close. And we have most beats across the board, but let's take a quick look here. So, Meta Platforms, ticker symbol META on the NASDAQ. I'm sure a lot of people are familiar with this one. Stock closed a touch below 475 a share. As you see, touch over 501 right now after hours, up over 26 points, another 5.5%. And if we check out the numbers here, we can see some pretty healthy beats coming in on the top and bottom lines. 516 a share on estimates of 471 roughly, and revenue of a touch over 39 billion on estimates of 38.26 billion. They pointed out the growth in certain sectors, and we can see capital expenditures in second quarter totaled about 8.5 billion, up from 6.33 billion. Company said in April it would increase its spending levels for the year by up to 10 billion for infrastructure investments to support its AI ambitions. But if we come down here, we can see net profit 13.5 billion second quarter, up about 73% compared with this time last year. Sales up to 39.1 billion, up 22% from a year prior. So these are some big numbers here. Revenue growth in January to March period exceeded 27%. Third quarter revenue expected to come in between 38.5 billion and 41 billion. It's about a 10% range ahead of analyst expectations of 38.3 billion. So we have, of course, an increase in spending, but we have consistent growth in revenue, in profits, and of course, in future guidance moving forward. As you see, this range significantly higher than this 38.3 originally forecasted by analysts moving forward. That's for next quarter here, looking like about the third week of October. But Meta, in my opinion, growing nicely. They really do. They continue to do it. My only main concern here, personally, would be the revenue to market cap comparison, because I do know, again, I give credit where credit's due. A lot of those numbers are up nicely. We're talking 20+% growth quarter over quarter and year over year. But we have a PE now. We're approaching 30. I understand the market's still kind of trading near their highs, but I'm still saying, in my opinion, I have a feeling like they're going to potentially try to throw a wrench into the machine and make markets a little volatile here going into elections. Again, this is an election year. Elections due out early November, and we have a market cap 1.2 trillion. And again, I'm not denying that the growth isn't there, because we can see it clearly is growing very nicely. But about 135 billion for last year. I know this year 24, this number's going to be higher when we close out the year. But 135 billion, I mean, we're talking nine now after this pop, we're talking about 10 times annual revenue. And I understand that tech is leading the way, but again, I always just like to mention that you are technically, if you get in now, in my eyes, you're technically buying this company at a potentially overinflated value. We have markets near highs, and obviously you're going to be buying this stock kind of near the highs. So if we do have a big pullback, again, we had a gap up here at the end of January for a lot of stocks. So I just want you to keep that in mind as well, because this, as you see, is looking like about 406 and a half. And, it seems like a big drop. It seems like it shouldn't. I understand earnings have been consistent. But realistically, from this level, even at 500 plus, we'd be talking about a 20% sell off roughly if markets really start to, pull back and get volatile, which really isn't too crazy if you think about it. But if we draw out our top line resistance here, going back from these highs of April 8th, 24, connecting to that high right there, July 8th, 24. You can see if we spike up now over the next week or so, you can see we could potentially hit new highs above 542.81, and we can hit this line here of about 547, 548. This other resistance going from this initial high here on March 8th, 2024, connecting to that high April 8th, 24, just cutting straight across. So if it breaks above that level and continues to climb up, we can see potentially 570 plus, which of course would be another 52-week high. But I wanted to point out, a couple of resistance levels I'm personally watching, and of course, if we potentially start to sell off and fill that gap. But switching over to stock charts, you can see similar story, right? We're sitting here right now 500 plus, so we're above our 50-day moving average. Top Bollinger Band, about 544, right? So this is why I'm saying this first resistance level of, yeah, like 546, 547, that could potentially be the next stop for Meta, especially if markets, again, don't become volatile, don't have big red days. The MACD was curling, heading to the upside here with some momentum coming into earnings. Now we have a big jump up, so we're going to be potentially close to a cross, and that may add some momentum as well, which is why I'm saying we may have had this pullback. We rally up into earnings. Now we pop up on the beat, and we kind of continue to claw our way higher into the 530s, the 540s. RSI on the daily closed at only about 45.5, right? So this is what I mean. On the short term, we do have room to grow, maybe right back here to this key level. Let me see. Closed at 512.70. So yeah, maybe like the low 5 teens potentially before it starts to cool down a little bit with those RSI scalp traders. But on the weekly, RSI was overextended for quite some time. And then we had the pullback, and it was just kind of riding along the mid-Bollinger Band. As you see, RSI slowly coming up. Then we get overextended, pullback just to about the middle of the road here, looking like at about 440. And then we started to spike up. So our mid-Bollinger Band, 487.5. We're at above 500 right now, which would bring us to like here. And yeah, let me check the high on this candle out of curiosity. High on the candle, 506.68. So this is why I'm saying maybe we can see like this 507 level, maybe even break up to that 512, 513 before we kind of pause for a little bit, let the RSI get in check, and then we can potentially take the next leg higher. You can see even on the weekly side, the top Bollinger Band, 534.69. On the daily, it was 543.94. So it definitely has more room to grow. And again, the RSI wasn't really overextended, even though it rallied up a little bit going into earnings. But good beat by Meta, and good growth. Again, profits up 20+% year over year. Can't deny that growth. ARM, as we see, ARM actually came out, reported earnings, and they posted some pretty decent numbers in my eyes, beating on the EPS side by about 17% and beating on the revenue side by 3.7%, or almost 33.5 million, posting 939 million on estimates of about 905.5 million. Stock right now down about 13.33%, going from 144 down to 125 after hours, and supposedly, we obviously know demand is there, profits is there. Fall short on a key segment. Let me see. Royalty revenues come up short. Let's see. We're going to miss royalty revenue. Net income 223 million or 21 cents a share, up from 105 million or 10 cents a share in the year earlier. These tech companies are really growing significantly well year over year. I really have to be honest. So I can appreciate the hype behind it. But again, I just want to remind everyone, everyone waiting on Jerome Powell, supposedly rate cuts are coming, and again, we remain unchanged. And I just want to remind everyone, we have been on a run since last November on the supposed rate cuts that have yet to come to fruition. And people keep trying to continue to justify these highs. And it really seems like tech is really the main beneficiary, not the entire economy as a whole, in my opinion. But we'll see what happens. Again, we can potentially run into some volatility and some sell-offs over the next couple of months with elections coming up. Again, this time last year, just to remind you, August, September, October last year, we went into sell-off mode. So I just want everyone to stay sharp. Not saying it's going to happen. I just want you to stay sharp. But good growth here on the net income side for ARM. Company's revenue came in 939, up 39% from 675 million a year prior. Phenomenal growth. Analysts were looking for 906. Top line total included 467 million in royalty revenue, whereas the consensus was 492 million. Okay, right. Understandable, right? Because that's kind of their IP that they're getting royalty revenue from. So you don't want to see it go down, because then you may potentially raise the theoretical red flag. Oh, what if money is flowing out of that? What if these clients supposedly went to one of our competitors and, dumped ours? So I can understand how that's potentially viewed as a negative, but you can see right here below it, revenue from licensing and other sources amounted to 472 million, while analysts were projecting 418 million. So even though we lost what about 25, maybe 30 mil on the royalty revenue, you can see revenue from licensing up about 60 million, right? So in my opinion, the way I'm reading it, I appreciate the fact this could potentially be viewed as a negative, but overall, it really doesn't seem like anything that hurt the company too much. And for all we know, again, moving forward, maybe analysts will pull back this royalty revenue next quarter estimates down to like 470 million, and maybe the company comes out and posts 490 million, and it's not a problem, and we're right back on track, right? So we have to wait and see what happens. We know that a lot of these numbers change from quarter to quarter, and in the moment, like we always say, sometimes you have to deal with the short-term volatility in order to kind of lock in on that long-term growth. And I understand that ARM could be potentially viewed as overvalued for sure, but they are growing nicely. And again, we do have to follow the numbers, but I do want to show ARM again. We had the gap up basically around the same time there, early Feb, and we had the high right here late January. And you can see the high here, 79.94, right? So it's about $80. And then we jumped up, and we haven't technically filled that gap yet. And if we come down and we look at the chart, so if hypothetically we go to 80, stock closed 144, that's less than half. Market cap 139 billion, so less than half would bring us to, we'll call it maybe like 80 billion. Look at our PE up here, almost 500. However, the EPS side has been growing very nicely for ARM. So that is probably going to slowly adjust itself and come back down to earth. But if we do potentially pull back, right, we're talking about like 80 billion potentially. We pull back, maybe fill that gap to $80 a share. Again, I'm not saying it will happen. However, it could happen. We can see, look at the EPS coming in significantly higher than these analyst expectations the last 4 quarters in a row. So the profitability is growing nicely. The revenue also we can see going from 2 to about 2.7 holding, and then jumping up to almost 3.25 billion for 23. We switch over quarterly. We can see revenue growing for the most part. Net margin now climbing nicely, getting back above 20+% for last quarter. But if we look annually, we can see, 3.25 billion, market cap 139 billion, right? So this is why I'm saying, even if we do have a pullback, let's say markets again start selling off hypothetically for the next 2-3 months, and then maybe rally going into like, that last week of October, going into elections in November, maybe. If we do have a gap fill back down to 80, again, I believe they just said they're forecasting about 4 billion. I just want to double check. ARM kept its guidance for the year between 3.8 and 4.1 billion. So we call it 4 billion, right? Even if we sell off this, excuse me, even if we sell off this stock down to 80 billion, down to $80 a share, roughly 80 billion market cap on 4 billion annual revenue, stock's still trading 20 times annual revenue. And that's at $80 a share, right? So this is why I'm saying, I know it's new and, everyone's hyped about it. So I understand it's kind of on the up and up, but technically in the numbers, in my opinion, it could be viewed as overvalued. And while I do like it in the long term, I just wanted to alert everyone that this could potentially happen and we could start selling off. And this gap fill right here, really can't catch you too off guard, if you will, in my opinion. But good beat for ARM. Good beat for ARM. We like to see beats. We like to see green numbers. And RSI was up here. Dipped down, boom, we came back. We broke below the 50-day moving average. Now the stock is 125, so we're below our bottom Bollinger Band on the daily. And we can see the 200-day moving average starting out at about 95, slowly risen up to above 105. So if we slowly kind of tick it down, maybe we can bring this down to like 115, 110 we could potentially hit, kind of meet up near the 200-day, then maybe you can have a bounce. Again, it's hard to call because technically, again, in my opinion, it is overvalued in the numbers, so it's hard to tell if they're, going to bring it down to 120 and then bounce it. Are they going to bring it down to this 200-day and then bounce it? Or is it just going to completely start selling off, fill that gap, and then they bounce it? So, I know a lot of people don't want to hear it if they own it or if they bought calls. Obviously, it didn't really work out immediately after earnings for you. My apologies. But again, we do have to be realists sometimes when we look at these situations. And, just because you own it or maybe you personally like it or ask for an update, like, I'm not going to come on here and just kind of pat your back and oh yeah, everything's great. Don't worry about everything. We have to call it like we see it sometimes. And ARM could definitely pull back. ARM could definitely pull back. But RSI here, about 42.5. But that's obviously probably going to chunk back down now towards the 30s tomorrow. RSI in the weekly about 56. So yeah, we were pulling back. Looks like it had a nice healthy bounce off the mid Bollinger Band here. And now supposedly people are quote unquote upset with these royalty revenue numbers. So now we're down to about here. So we'll see where it decides to bottom out. This is why I'm saying it looks like maybe here is like a nice key level, maybe around 115 it looks like. So we may potentially see 115 and then bounce. But my original point I was saying before is, I understand the growth and I understand if you're bullish on this, but like we always say, when we run these stocks up, sometimes we have to bring them back down to reality. We have to bring them back down to earth, right? We have to kind of adjust our market cap to a little bit more of a realistic valuation. We got to bring the PE in check, right? Now it's at 466. Maybe they want to bring it down to like 200 before they bounce the stock, right? You understand what I'm saying? So again, it's hard to tell exactly what is going to happen, but as we know, sometimes when we really start to have these big climbs, we get a little overextended and the stock could get quiet for a month, a year sometimes. And then, we just kind of consolidate, we flatten out, and then boom, we pop and we take that next leg higher. So obviously, if you bought calls, this is a rough report. If you own the stock long term, technically these numbers are growing. And we have seen worse stocks, right? Could be worse. But ARM growing pretty nicely there, coming in with good numbers. Qualcomm was green after hours here on a nice beat, as we see on the EPS side, 233 on estimates of about 2.25 a share. Revenue 9.39 billion on estimates of 9.2 billion. So they had a nice beat there on the top and bottom line. Auto industry goes digital, and they spoke about 12% overall growth, QCT semiconductor business segment. And we're looking, revenue rose 11%. Automotive chip business, roughly 9.9 billion in sales. Up 39%, above analyst expectations. Didn't change full year forecast. But they spoke, I remember seeing big growth in the auto. Here we go. Revenue from mobile devices rose 12% as automotive spiked 87%, while Internet of Things fell 8%, right? So a little bit of a mixed report, but overall seems like they are growing nicely. The demand is there. Closed at about 181, was up 8.33% basically throughout the day. Now pulled back just about 3 points right now, sitting at 178. Qualcomm, in my opinion, probably one of the more fairer valued tech stocks here. Market cap 202 billion on the close, PE of about 22. EPS has been steady. They came out, they beat EPS again. Annually, again, we had a slight pullback here on the revenue from 44 to about 36 billion. And even if we look at that 36 billion number, you can see we're trading like 6.5 times annual revenue with a PE of 22. So again, if we talk about, in my opinion, kind of quote unquote closest to fair value, the least overextended out of these three names, I would probably personally go with Qualcomm. And, they have been pretty steady, and the stock has been on the up and up again just since that November rally we spoke about before. Stock was at 110, ran up to 230. Just phenomenal gains over the last, what is that? 9 months. Phenomenal gains for Qualcomm. And again, we have these big run-ups, and this is why I'm saying we can potentially like step it down, bring it back down to reality, previous key level, and then boom, we just continue to bounce it and run it higher. But Qualcomm with some decent numbers. I know, Internet of Things down a little bit, but 80+% jump in the automotive segment That's pretty impressive. RSI was sub 43, nothing too crazy. It was up after hours. I was looking for a run up maybe to this mid Bollinger Band, 193. If they do bring it back down, we could also potentially always sell off, form that double bottom maybe, and then rally over the next week or so, right? So only time will tell, but it seems like the bottom of the bottom here may be about 161 at this 200 day if they don't really sell off the markets. But MACD was pulling down. We were at, higher highs here. So we did have to come back down to reality. And this is why I'm saying we can potentially, we could start to kind of just channel down into this trumpet, right? And then bottom out maybe at around 150 and then start to break up and have that climb back up. I mean, they could kind of keep it flat. As you see, we were up here. Wait, let me pull up after hours. You can see we had a big run going into the close. Look at that big spike up to about 195 after hours. Then we started pulling back and selling off, bottoming out. Potential bear flag could be viewed here. Potential descending triangle also. So we can maybe break back down to the low 170s. Yeah, it looks like about 171, 172 maybe, back to that trend line. But technically, again, in my opinion, one of the more fairer valued tech stocks of the three names. So if it does dip down here and you're bullish on it and you're stepping in and you're buying that dip, in my opinion, I would understand that. In my opinion, I would understand that. But probably going to get back to that 190 plus mark, which is probably why, in my opinion, it immediately spiked to that 195. Right? It was a good report. Technically, the growth is there. Some people probably took profits. Now they're kind of beating it up a little bit. So, in my opinion, excuse me, in my opinion, this is how it goes sometimes, right? Technically good numbers, but then they pull it back. They take it out of the spotlight. They piss off all the short-term traders. And then when no one's looking, they rally it back up into the 190s and the 200 plus. So over the longer term, I personally do like it. Here in the short term, kind of had a pop and a drop, but anything can happen, right? We can turn green pre-market, and then tomorrow after the open, all of a sudden Qualcomm could be up 3, 4, 5%. We know this, so only time will tell. But technically, some pretty decent numbers across the board for all three of these tech names, and I just wanted to do a quick update here and just mention just a couple of levels and lines that I personally drew out that I might be looking for. But that's pretty much it. I'll end it there. Probably spoke for way too long. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel, and of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I do want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.